going to show you the debit and credit rules. Now, if you learn these debit and credit rules, you'll be able to analyze any transaction, and then that'll help you to journalize it, because what you have to do when you read a transaction, you have to determine what to debit and what to credit. And to do that, you're going to have to analyze that transaction. Well, if you know these debit and credit rules, it will be much easier to analyze a transaction and decide what you need to debit and what you need to credit. So take these debit and credit rules that I'm going to give you, commit them to memory, learn them. Then it will be much easier to analyze a transaction, and that will help you be able to journalize it. So, debit and credit rules. I'm going to start with the accounting equation. Now, we already know the accounting equation. I'll go over it once more. Assets equal liabilities plus equity, owner's equity. All these are equity accounts. Capital, so liabilities plus capital, minus drawing or withdrawal. They are one and the same. Your textbook or your company may call it drawing. Another textbook or company may call it withdrawal, but they are the same. Plus revenues. Revenues is what we earn, of course, for doing whatever it is we do, and minus expenses. So the accounting equation, assets equal liabilities plus capital minus drawing plus revenues minus expenses. Now, assets are things of value that we own. We already know that from our definitions, but I just want to go over it briefly again. Liabilities are debts that we owe. Capital is what we're worth, our net worth. It would be what we invested in the business to begin with, plus anything that we earned and kept in the business. Drawing or withdrawal is what we take out of the business for our own personal use. Revenues would be our earnings, what the business earns for operating on a day-to-day business, or day-to-day occasion, rather. And expenses, those expenses that we incur in day-to-day operations. The electricity bill, the water bill, the rent, those kinds of things. Now, you see that under this accounting equation, I have what we call T accounts set up. T accounts are excellent learning tools. They're not a formal accounting form, but they're excellent learning tools. And they're going to help us learn the debit and credit rules. So let's start with assets. Notice I have a T account under the asset category. All assets have a name. I'm going to write name. All assets have a name. And I'm going to name some assets. Some of the names for assets would be cash, accounts receivable, notes receivable, supplies, inventory, equipment, buildings, land. All those are assets, things of value that we own. Well, in addition to every asset having a name, it has a left side that we call the debit side. It has a right side that we call the credit side. All assets increase on the debit side and they decrease on the credit side. And the asset side is always the balance side, the increase side. The increase side is always the balance side. For assets, that's a debit. So assets would increase on the debit side and they should have a debit balance. So if we had a lot of transactions in an asset account and we were looking for the balance, it should be a debit balance. Okay? Liabilities. Liabilities are debts that we owe. Liabilities then would work opposite of assets. But every liability account would have a name, and let's name a few liabilities. Accounts payable, notes payable, property tax payable, unearned rent, unearned revenue of some sort, unearned fees, something that we've been paid in advance for but have not performed the service yet, that would be a liability. Now notice something about these liabilities. Every one that I named either ended with the word payable or began with the word unearned. So your liabilities are easier to pick out because they normally have payable on the end of them or unearned on the beginning. Every liability account has a left side, which is the debit side. Every liability has a right side, which is the credit side. But liabilities increase on the credit side and decrease on the debit side. And if the balance side of an account is its increased side, then liabilities should have a credit balance. So if we had a lot of transactions, a lot of debits and a lot of credits in a liability account, it should end up with a credit balance. Okay? Then we have capital as our next category in our accounting equation. Every capital account, of course, capital is what the business is worth. That, again, is what we invested in it to begin with, plus anything that any earnings we kept in there. So every capital account has a name. And the name for a capital account would be owner's name, capital. So if this happened to be Jack Johnson, then his capital account would be Jack Johnson Capital. Capital works the same as liabilities. Every capital account has a left side, and that's the debit side. Every capital account has a right side, and that's the credit side. Capital increases on the credit side and decreases on the debit side. So if the credit side, or if the plus side is the balance side, then capital should have a credit balance. Credit plus, so credit balance. Capital should have a credit balance. Drawing is the next category of account in our accounting equation, and this can be called drawing or withdrawals. It's one and the same. And drawing is what we take out of the business to use personally. So drawing works the opposite of capital. Now every drawing account has a name, and that name would be owner's name drawing. Jack Johnson drawing or Jack Johnson withdrawal. In addition to the name for every drawing account, it has a left side, which is the debit side. It has a right side, which is the credit side. But withdrawing, the increased side is the debit side, and the decreased side is the credit side. So if the increased side is the balanced side, then drawing should have a debit balance. You're noticing some similarities here. Every account has a name. Every account has a left side, and the left side is always called the debit side. The right side is always called the credit side, but the secret is some of them increase on the debit side and some increase on the credit side. That's what makes the difference. All right, next category, revenues. Revenues are what we earn in our business. It's what we earn from doing day-to-day operations. So revenues, of course, they all have a name. And some of those names, well, let's think. Revenue accounts should be named particular to your business. So when you're ready to name your revenue account, if you sell a product, your revenue account will be called sales. If you earn a fee for an accounting service, for example, you might call it fees earned. If you're a consultant, you might call this consulting revenue. So name your revenue account something particular to your business. Again, every revenue account, in addition to a name, has a left side, and that's the debit side, has a right side, and that's the credit side. Revenues increase on the credit side and decrease on the debit side, so revenues ought to have a credit balance. And in fact, revenues are rarely debited. Now, I'm not saying they can't be debited, because they can, but most often revenues are credited. When we earn a revenue, we credit it. If there was a mistake and we had to give back some revenue, then we would debit it, but that doesn't happen often. Most of the time we earn revenue and we credit revenue. Now, we might debit the revenue account if we have to make an adjusting entry or if we make a closing entry, but that's not a regular day-to-day, everyday activity type of entry. Your everyday activity type entries, revenues will most always be credited. Only in the case of an error that you had to correct would a revenue be debited on a day-to-day basis, not counting, adjusting, and closing. Expenses are those expenses that we incur in order to generate a revenue. That's what they do. Now, we might say, oh, expenses are bad, we don't want expenses. But if we don't have expenses, we can't generate revenue. For example, if we're a manufacturer, we've got to have an electricity expense to run machines in the factory. If we don't run machines, we don't earn revenue. So expenses are what we incur in order to generate revenue. Now, all expenses have a name, and some of those names might be rent expense, utilities expense, depreciation expense, property tax expense, insurance expense, supplies expense. Notice the similarity. They end in the word expense. So if you're trying to determine if an account is an expense and it has the word expense to its title, then it is absolutely an expense. Dead giveaway, right? If it says expense, we know it's an expense. So in addition to a name, every expense account has a left side, and that left side is the debit side. It has a right side, and that right side is the credit side. But expenses increase on the debit side and decrease on the credit side, and they should have a debit balance. So when we pay the electricity bill, for example, we're going to debit utilities expense. We would rarely, in day-to-day operations, credit an expense account. Most of the time it's debited. Now, I'm not saying we would never credit an expense, because we do. If we had an error and recorded an incorrect debit, then we'd have to credit it to fix it. If we need to make an adjusting entry, we might need to credit this account. When we close this account, we credit it. There are circumstances under which we credit an expense account. But in normal, everyday, day-to-day operations, it is most common that we debit expenses. Okay? So those are your debit and credit rules. And if you learn those debit and credit rules, commit those to memory, learn those debit and credit rules, then when it comes time to analyze a transaction and determine if you should debit or credit a particular account, if you know these debit and credit rules, you'll be able to do that. Now, let me give you an example and show you how to analyze a transaction to determine what to debit and what to credit. Let's say that we purchased supplies on account. If we purchase supplies, that means we receive supplies. So supplies, of course, would increase. So if we have purchased supplies, we got some supplies, supplies is going to increase. Let's see, using these debit and credit rules, what we need to do. Supplies is an asset account. Supplies increased. All asset accounts increase on the debit side. Therefore, we would debit supplies. So for that transaction, we want to debit supplies. Now, we didn't pay cash for those supplies. We purchased those supplies on account. If we purchase supplies on account, then we're going to pay for those later. And if we're going to pay for those later, we have a liability. We didn't have a liability before. We didn't owe anybody anything before. Now, we owe some money. We owe somebody some money for supplies that we've purchased. And we're going to have to pay that. It's a liability. So let's look back at our debit and credit rules and figure this out. We've incurred a liability. We owe something on account. Therefore, the name of that liability would be accounts payable. Well, accounts payable has increased because we didn't have one before and we have one now. So it's increased. Accounts payable is a liability. Accounts payable increased. Liabilities increase on the credit side. Therefore, we need to credit accounts payable. So we've just used these debit and credit rules to analyze a transaction. And that transaction resulted in a debit to supplies, a credit to accounts payable. So if we were ready to journalize that, and if we had an amount, I didn't give an amount with it because I'm showing how to use these debit credit rules to analyze a transaction and pick out a debit and pick out a credit. So I'm not interested in amounts right now, just account titles and getting us used to determining what to debit and what to credit. So by analyzing that transaction, purchase supplies on account, and by using these debit and credit rules, we determined that we needed to debit supplies and credit accounts payable. Then we could go journalize it. Right? Let's do one more. Let's say that we have performed services. Maybe we're an accountant or a consultant. Let's say we're a consultant. And as a consultant, we have gone out and consulted with some clients, and they paid us some money. So our transaction might read, received cash for consulting services. So let's analyze that transaction using our debit and credit rules and find out what we need to debit and what we need to credit. If we've received cash, then cash is increased. So let's look over here and see what that would mean to us. Cash is our account title. It's the name. It has increased. Cash is an asset account. So the asset called cash has increased, therefore it would be debited. So for that transaction, we would want to debit cash. Now, what did we do in order to get that cash? We performed some consulting services. Well, that's our revenue. How do we get our revenue? We consult. So we performed some consulting services and we've gotten some revenue for it. So we've earned revenue. This might be called consulting service revenue. That might be our account title. Or maybe we just called it fee revenue or fees earned or consulting fees earned. It would be called something particular to our business, and all of those are reasonable. But whatever we call it, and let's just say consulting service revenue. Let's say that's our account title. Consulting service revenue is a revenue account. It increased. Revenues increase on the credit side. Therefore, we would credit consulting service revenue. So our transaction then would result in a debit to cash, a credit to consulting service revenue. And you know the rules of double entry accounting? There always has to be one debit at least and one credit at least for every transaction. So in this case, we debited cash and we credited consulting service revenue. So by using these debit and credit rules and learning these debit and credit rules, commit these to memory, we would be able to use these rules and analyze any transaction and determine what to debit and what to credit. Those are the debit and credit rules.